Welcome to the Armchair Trader podcast, and this week we're back in the world of cryptocurrency and specifically crypto mining. Joined on the podcast today by Youwei Yang, who is chief economist with BIT Mining in the US, specialist in crypto mining. We're going to be catching up on that whole sector and how it's developing. Welcome to the podcast, Youwei.
Thank you very much for having me. I appreciate it.
To start off with, just for people who are not familiar with BIT Mining, New York listed company, BTCM, can you give us a little bit of background on the company and what it does?
Sure. So our company is mainly focused on the whole ecosystem of crypto mining space, including the mining pool, the self-mining, the data center, and the mining machines manufacturing research, meaning that we cover all the landscape of the crypto mining, and we are among the technology-driven companies in the space.
So, in that respect, would you say you're manufacturers of mining machines? I know you host them and you sell them on to other companies as well.
Yes, so we are having three business lines, including the mining itself. Basically, we can say we have hosting and also have our own self-mining. And the second line is the mining pool that we own the BTC.com mining pool, which is the sixth largest mining pool of Bitcoin in the world. And the mining machine you just mentioned is what we acquired. It's called B Computing 2 years ago. That it had a capability of research, development, and manufacturing of mining machines in Bitcoin, Ether, and also Litecoin, Dogecoin. That's where we can use the machines to self-mine and also can sell to others.
Would you say that cryptocurrency mining is still as profitable an activity now as it was, say, a couple of years ago?
Definitely, it's still profitable. Otherwise, we won't be here surviving. But so compared to 2021, we're less profitable. But compared to other years like 2020 or 2022, it's still comparable, as the mining is a dynamic environment which has the difficulty hash rate and the mining difficulty been changing. So we can adjust the mining difficulty and the reward and also the profitability as the whole ecosystem evolves.
And you mentioned the BTC.com, the mining pool. Can you just explain to people who are not familiar with what a mining pool does, how that functions in practice?
Sure. So if individual miner like myself or yourself who has machines like 2 or 3 or 5, the mining is basically solving a complex mathematical problem called cryptographic hash, and the process is somewhat random. So meaning even if you solve the problem, you're not 100% getting that Bitcoin reward or Ether reward or Litecoin reward. So having the kind of thousands and tens of thousands or millions of individual miners joining together in a pool. So basically, we're mining and sharing the profits together. That will make sure that we have a relatively stabilized percentage of lucky rate. That's what we call lucky rate. Is we share the profits and rewards as we kind of aggregating that hash rate, that difficulty together, that we can distribute out to evenly for the mining pool participants.
How important an asset to the company's bottom line is BTC.com?
It's a significant part of our company's bottom line assets. People may not see that as a physical assets because it's a website, it's a domain, but its brand itself is uh, very kind of crucial to us because it's one of the first Bitcoin related websites, and we actually bought it from a billionaire of Bitcoin who's called Jihan Wu about a similar time 2 years ago, and That's a high brand name in the space, and it's improving us. That we're not only a kind of manufacturer or hardware company, but we're technology driven, including software, hardware together. So the software space piece and the ability to have this big BTC.com to connect to all the participants in the space allow us to be more vertical integration, including the mining pool, mining machines, and mining center. So that's a crucial asset to us.
And the company is effectively, as I understand it, like sort of a chair with four legs. You've got the self mining of crypto. You've got the mining pool, which you've just described. You make mining machines as well.
Mm-hmm.
And then you also have data centers too.
Yes.
Are those data centers specifically tasked for crypto operations, or are they more sector neutral?
Yes, right now is purely crypto mining capability, and we own a large facility in Ohio, U.S. It's 82.5 megawatts. It's considered as a large operation, and put it in a perspective. Airport probably their capacity of electricity is probably less than 100 megawatts. So we're basically a large enough electrical capacity of running crypto mining in Ohio, and that data center we own, we use probably a majority of that for hosting services, and that's for data center to hosting other people's machines to mine the Bitcoin or Litecoin in our mining center, data center. And we also operate self mining in that data center as well. Basically, we own the machines ourselves, and we operate them profitable based on the coins we mined. So that's two pieces coming to that data center. We have hosting and also we have self mining.
So in effect, if there was a company who was interested in getting into cryptocurrency mining, you could almost sell them the machines and host the machines for them as well.
Yes,
You look after the entire cycle for them.
yes, exactly. That's actually exactly what's happening for some of our clients. They trust our machines, and then they just buy and then host the machines in our site, so they don't need to ship around from, say, China to US to or from Europe to Brazil for to Russia or to any other machine hosting places. As you know, that probably one of the major mining space in the world is US, China, Russia, and after the China ban and also the Russia conflict with Ukraine. So there's things happened over the last 2 years, basically moving more to US and other Europe countries. So that's where the shift happened. But that tells the story that the miners shift around, but with having vertical integration help us to stabilize that dynamic change.
Understood. One of the big questions you've mentioned the power capacity. One of the big questions that has circulated around Bitcoin mining specifically has been the amount of power that's actually consumed by the industry. We've heard a lot about some miners who are now exploring sites where they can leverage renewable energy sources like, say, hydroelectric power in Scandinavia. Do you think that's an issue for miners now, sourcing renewable energy rather than just burning energy straight off the grid?
Good question. We as a company, we want to be ESG oriented, as we understand we have the responsibility for society, and also uh, we want to be kind of looking for the future to be climate friendly. And being having the facility in Ohio, that's actually coming from the grid, which has the composition of all uh, possible different way of electricity coming into the pipe, which has natural gas, nuclear, and also solar and wind. So it's a mix for the grid in Ohio. But we do explore other sites within the U.S. or outside the U.S. that's having wind or hydro or solar. capability. So that's exploration we have. And obviously during the winter time, everybody's cash is kind of a little bit tight. So we want to be very cautious of where and when to open up a new site, if that's possible, coming in. So to your question of hydro, our site used to be in China is actually hydro, which was one of the largest hydro, 430 megawatts hydro in Sichuan province in China. But unfortunately, of the China ban, we have to shut it down. But we are very capable of operating hydro and other new energy backed crypto mining sites.
And B Computing, which you acquired, obviously they're the guys who build the actual mining machines. But we're not just talking about Bitcoin mining, are we here? You actually build machines that mine other coins as well.
Correct. So Bitcoin mining, the space is very competitive, as you can imagine. There are very many mature players in the space. We do have that technology, but we are probably one of the top, but not kind of say we are the number one. That's to be very frankly saying. So we are trying to be the best, but we're among the best for the Bitcoin miners. In the other coins like Ether or Litecoin, we can say we're among the best. That because the reason being the space is not that competitive per se, and also we are more into the crypto that has the mining machines that are more volatile, such as Ether and Litecoin. Obviously, Ether has changed to POS last September. That has changed our strategy a little bit since we used to be very Ether centric, Ether focused, and we are now using those machines and the capability of switching over to ETC, Ethereum Classic. So can kind of already change the strategy a little bit for Ether side, but our Litecoin machines, which has the capability of also mining Dogecoin, if you don't know that Litecoin and Dogecoin are actually coming out together with mining, so it's a double coin mining algorithm. So we believe that Litecoin is very stable, and also Dogecoin has its potential of kind of attracting young generations and also the meme side of the sentiment. So our Litecoin Dogecoin machine, we call it LD3, basically the generation 3 of LD. L represent Litecoin and D represent Dogecoin. So the LD3, our new machine launched January, has the one of the best reputations out there, and also getting the exposure to clients already. They're already trying to inquire, learn to test, and to negotiate price, but it's still in discussion. So I don't have much details to share. And as you can say that Elon Musk has been putting out a lot of tweets and experiments about Dogecoin. So we don't want to be kind of the hype, but we understand that Dogecoin has the potential to be one of the kind of adopted coins among Twitter users or whatever users in the future. So that's kind of helping us to hold a stance that even though we are not the largest Bitcoin miners out there, but we have this unique specialty in Litecoin miners and also Ether miners.
So Dogecoin used to be considered a little bit of a, I don't not quite a joke currency, the original launch, it was a highly speculative asset. People were just buying it because of the name. What you're saying now is that this is actually becoming something a little bit more serious, and is a coin that more people are taking notice of.
Yeah, you're right. That's definitely started with a joke, kind of trying to take a laugh of Bitcoin in like several years ago. But obviously, anything actually comes into large adoption is not only the technology that's proven and sound, but also has the name and brand, and also the kind of the sentiment that can help to stimulate the adoption interest. Obviously, Dogecoin is not the best technology, but it has a technology. It has the enough sound and solid technology that will help the work. At the same time, it attracts billions of interest and millions of users. So that will kind of get in the combination of technology and the sentiment. So I do think it's going to be survive and it's going to be adopted one day or another. So I'm kind of neutral and leads to positive towards the Dogecoin adoption.
In a recent press release, your CEO was when he was talking about the launch of your new LD3 mining machines. He said that the technology was extremely well timed because you have the upcoming Litecoin halving event in August. Can you explain a little bit more about how the company is well positioned in that respect with the introduction of these machines and the impact of the halving event?
So for people who don't know the halving, I'll explain real quickly that I just mentioned solving the complex mathematical problem and save the data into a block will get a reward, and the reward will be reduced from time to time. For Bitcoin, it's 4 year halving. So it used to be like, say you mine one block, you can get two coins. Right now you can get one. So that's called halving. I'm just using the kind of the symbolic, but in reality, that's a very specific number. So having that mining reward to be halved will basically limit the supply structure. For economic 101, limiting the supply, and that will boost the price. So that's always the mindset in the space that the halving will lead to the market hype for the deflationary supply and will cause to the price to go higher of the coin. So that's where we say it's well positioned in that regard, because roughly if you look at the price chart of Bitcoin and Litecoin during their halving time or reducing their supply time, the Bitcoin price or Litecoin price will always go higher in that around that time because of the supply. I wouldn't say it's promised to go higher, but it's likely from the historical performance. So if the price go higher and there's going to be higher demand for clients and market participants to get involved in that mining and buy more machines, and will be one of the best options out there.
And you've also said recently that the company's taken some of its mining machines offline because of the, I think you said, recent declines in cryptocurrency markets. Is this a dynamic that the company can take advantage of, in that you can basically just switch off some of your mining machines when the market's dropping, and then when prices are picking up, you just bring them back online, start mining again?
Yes, indeed. You brought up a very good point that we are very flexible in mining. We're not like manufacturing of cars or anything that will require a very specific timeline regarding which parts goes to which parts and the power cannot shut down. But we are very flexible. We can shut down the machines very easily, and that has kind of two mechanisms. One is the internet shutdown. So we basically can close down the internet and use a software, and that can turn down the machine's usage of power very quickly in a couple minutes. And the other part is basically unplug the machines, uh, turn off the power. So that two mechanism both works, but the internet turn off the pause is much more flexible and much harmless to the machines or the whole facility. And we are basically serving as a buffer of the electrical grid, meaning that we can shut off the machines whenever the crypto price is low or power price is high. And we actually help the community and also the grid that they sometimes, for example, it's very cold and everybody's putting their heater on, and the grid needs more power, and then they just call us up and say, can you help us, and can you shut down your 82.5 megawatts for a couple hours or for 24 hours, and we'll pay you for this and that. So this is called demand response programs, and basically we can sell back the power to the grid, or participate in any of the subsidy programs or demand response programs that will be basically serving the community, serving the grid to smooth the power usage, to kind of balance the supply demand of power, and we can be the buffer of that. And you just mentioned the shutting off the machines. It's mainly for the winter, as you said. It's Q4 of our Q4 earnings report of our release. That's because of the winter time. Crypto price was low due to the FTX crash, and the power price was high due to the winter high usage of power. So that time is where we exactly used the mechanism of turning off the power and then just serving the community, helping the power usage to be smooth.
And your share price is actually, I mean, looking at the share price, it has rallied recently. Um, I'm guessing that there's quite a strong correlation here between your share price and rallying in some of the coin prices. Is that something that investors just have to expect, because as coins pick up in price, so there's going to be more interest in a miner like yourselves?
Sure. Coming to the financials, we do have quite close correlation with our stock price and also the Bitcoin or other crypto prices. That's a very common to crypto mining firms, including us. That's our public. And also, I think there are two parts. Recent hype are coming, one due to the effect of crypto price coming back up, and the other fact is our launch of LD3 machines, and also the plan of rolling out LD4 machines, and also the Bitcoin miners will be kind of already taped out, and it's coming the final kind of pipeline of manufacture out of the Bitcoin machines. So that kind of excited the investors quite some, with our capability of actually self independent of manufacturing of the machines. So I think the price hype is due to this two effect.
And my final question for you, it relates really to, from the perspective of an investor. They could, for example, if they want to get exposure to cryptocurrencies, they could buy into, say, an ETC that's tracking a specific basket of coins. Yes, they could go the whole hog, buy directly into one or more coins. What's the benefit of buying into a company like yours bring to investors, rather than just the pure coin exposure? What is the argument for buying shares in a crypto miner?
That's a ongoing debates, but I will take my stance here that I believe that crypto mining firms, public that like us, will have, besides Bitcoin, Litecoin, Ethereum itself, we have the multiples in kind of mining pool, or the vertical integration itself. So that's not only captured in the Bitcoin price. So that's meaning that we have higher beta than Bitcoin or other mainstream coins. It's common to us, and the core for us to understand is we're not only a miner, we're not only a manufacturer, we are ecosystem builder that in the mining space, and also we support for the Web3 space as well. So basically, I kind of call us as a Web 2.5 company, that we have the infrastructure of Web 2 companies, the websites and everything, and the mining machines are kind of also having Web 2 features like the semiconductors, the chips, and things like that. And we're all connecting to the Web 3, the blockchain space. So we kind of connect to two different worlds, that will have different lengths to connecting with different dots. And these dots basically serve to users of Web 2 and also Web 3. And this vertical integration among different parts of the space in crypto mining and also Web 3 allow us to be having more potential to have higher growth, both in users and revenues, and also business lines in the future. So that's, I think, the core reason for investing us or other crypto miners.
Fantastic. Well, thank you very much for that. That's been actually really illuminating. Thanks for providing a bit more insight for our listeners into the world of crypto mining.
Thank you for having me.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.